This summer's been pretty crazy because we had that run up in June, July, and then all this Japan, chaos in August kind of spiked volatility. And that was actually a really good opportunity to use some of these options on futures overnight if you were trying to hedge your positions. I remember back in like late July, early August, around that time when the market was sliding. I'm always pretty, long in the market when we're in an uptrend. So I had a lot of long positions, but I was able to, I think like the prior week when the VIX was right around 18 before it spiked up to 30 plus, I remember the market closed I think it was a Thursday afternoon, the market closed, and it was right ahead of this jobs report we were waiting on the following Friday. So the market was already closed, so I couldn't actually buy any puts on the SPY or something. So I actually went into the micro S&P futures or the micro ES futures and bought some puts just for a hedge because I was, seeing the rising VIX and something didn't look right to me. So I wanted to be hedged. So I bought some puts that were like expiring in 2 weeks, just wanting to have a little bit of protection over the weekend. And then, of course, this Japan stuff unfolded out of nowhere. And, that's where we saw that volatility spike from 20 up to 40. And, then it came down in less than a week. But still, like the puts I bought helped me, sleep a little bit better that Sunday night into Monday when the markets were literally having a little mini crash because the micro ES puts I bought went from $4 up to 30. And I mean, it was a very small position. I think I risked like $1,000 on the put hedge, kind of, on a low six-figure account. I just wanted a little bit of protection. And I was able to make some money on those puts on the micro futures when the market was closed in the evening. So it's just a nice way to use those micro options on futures or even the full ES size if you want to, because they're very liquid. Now, whether you're day trading or not, the ES and the MES options on futures are a very liquid alternative to the SPY because, for example, the micros are 1/10 of the size of the full ES or SPX. And of course, there's a lot of different advantages to that based on taxes and stuff. You know about the 80 or the 60/40 rule. But not a lot of people know that SPX options are treated as futures. So you get the same tax advantages if you trade SPX over SPY.
Yeah. I mean, and you think about it, you have the overnight access to them as well.
Yeah.
And if you want to trade futures directly against your MES or ES options, you have the strike prices that are completely correlated with to what you're charting and what you're trading for futures.